Hello and welcome to the Praj Knowledge Center. As promised earlier, I'm happy to present you yet another essential blueprint to become a pro trader or an investor. In this essential, you will learn to take right entry or exit in the trade or an investment, thus increasing your probability and profitability both. Entry and exit points are a very crucial part of trading and investment business. You must know where you are entering in the market and where you are exiting in market. Many traders get confused trying to figure out where to enter or exit in the market in absence of having a clarity or a clear strategy for entry and exit. Traders spend a lot of time in fine-tuning the overall strategies, but then they still make losses due to bad entries or bad exits. In fact, most of the traders lack the effective entry and exit methods, or they are in hurry, so they ignore the right methods. This hurried or ignorant decision leads to small profits or big losses. If you remember, I had already mentioned in one of our videos with the title Myths, Facts, and Realities of Stock Market. That video was, I think, dated 10th June. That the only way to make money in the stock market is to avoid big losses. And to avoid big losses, you need to have perfect setup for entry and exit. You can overcome this problem of ignorance or oversightedness by using classic entry and exit strategies that can enhance your profitability and reduce losses. If you are new to our YouTube channel or if you have just landed up directly in this video, I strongly suggest you to view our video on zones, levels, uh, resistance, and support levels before seeing this video so that you can get the clarity, right? And that video is by the title Market Turning Points, dated 13th June. If you have not subscribed to our YouTube channel yet, please do the same now and like and share the videos. When you subscribe to our YouTube channel, don't forget to press the bell icon so that whenever we load any new video in YouTube, you get the notification, right? Before we jump into classic entry exit strategy, we shall note that these strategies work in all time frames and in all types of trading styles. That means they will work in intraday trades, swing trades, positional trades. Yes, you will need to practice, practice, practice till the entry and exit skills become natural in your subconscious mind as part of your trading style, right? So let's look at first a typical chart where we can see accumulation, reaccumulation, distribution, and redistribution, and the next accumulation zone, right? So to know more about this, you can look at the entire video, which is, I think, around 20 minutes. But most of the professionals, they would watch out the charts for quite some time, and they would see the consolidation happening in charts at certain levels. That's the place they take long entries in those stocks or in those trades, right? And they would see the trade or investment developing in their direction, right? Yes, there might be retracements happening in between. They may add on their positions or they may increase their position size. That's part of pyramiding, right? I will make another video for pyramiding so that you understand that process rather, you know, just taking any position size or taking positions anytime, right? So by the virtue of pyramiding, they will increase the size of their winning trades and they would allow the trade or investment to develop and increase the profits, thus reaching the distribution zone. In the distribution zone, again, they will watch out and they would look for the reversal signals here such that they can book their profit. And those of the investors or traders who are a little aggressive type, they may take short positions here, right? And if the short position goes in that direction, they may take more positions in redistribution zone and book their profit in this accumulation zone, or they may also initiate new long positions in this zone, right? So this is the way the stock market typically works in. Now if we go to a candlestick chart, you would see the price may be going up or down, and for quite some time the price gets uh, consolidated in one zone where you would see the range bound candles, or you know your candlesticks are not able to break a pattern or a range, right? And that zone could be your accumulation zone, right? From here, if you see that your chart is giving you, your trading strategy or investing strategy is giving you a long entry, you can buy here by keeping a small stop loss below the lowest of uh, the candle, right? And you would see your trade developing, right? And then you would exit your position in this particular zone, and you can take a short position here if you get a reversal at this point. Of course, if it is giving you a continuation pattern here, you would like to continue with your trailing stop loss, right? And you would see that when the market goes downside from here in your short position, it may enter this accumulation zone again, or it may turn upside even without entering the accumulation zone. So our job is to watch out the market or the trades in these accumulation or distribution zones, right? So let's go further and understand what kind of entry exit system could be seen based upon the virtue of the types of traders we see in the market. So there are three types of traders: aggressive traders, moderate traders, and conservative traders. So are the entry and exit setups, right? So aggressive traders would prefer to take aggressive entry or aggressive exit. Similarly, a moderate trader would take a moderate entry or moderate exit. And the C type of entry or C type of exit is used by the conservative traders, right? So let's understand how individual trader, based upon his psychology, takes a trade or enters or exits from the market. So first we look at the aggressive trader. So let's say this is an accumulation zone and the price has gone upside, and from a level of uh, uh, upside bounce, it has come back to the demand zone or accumulation zone again, right? So what does aggressive trader do? Aggressive traders have got less of patience, so they may not even allow the price to enter inside the demand zone, and they may see some or other kind of uh, you know bullish patterns here. They may be bullish engulfing or bullish harami or bullish piercing, any kind of pattern, or maybe even a hammer, and they would take the long position, right? So this is called aggressive entry system. Similarly, when they exit, they would not allow even the price to enter the distribution zone, and much before that itself they would exit. Now what happens, maybe the trade goes in their direction here, but they would book smaller profits, right? So that's aggressive trader. Now let's look at what kind of entry system is followed by the moderate traders, right? So moderate traders also identify the demand zone or accumulation zone, and they allow the price to come back to this zone. And what they would do within this zone, they would see any bullish sign coming up. Now, the Again, it could be bullish harami, bullish engulfing, or hammer, or any other pattern. It may be dragonfly doji in this zone, and or it could be just a trend reversal, making higher high and higher low. And they would see that a candle emerging out of this zone, which is further making higher high and higher low, confirming the reversal of trend. So they would take trade in this level, right? A little above than the zone. And they would put their stop loss based upon whatever techniques of stop loss they use, whether they use ATR stop loss or super trend stop loss. So they would take a position here long. So that's moderate trader. Similarly, when it comes on exiting the trade, they would allow the candlesticks or the price to enter the distribution zone, and they would look for a similar pattern, which is a reversal pattern at that level, and they will book the profit. So that's a moderate trader, or called type B entry in classic entry exit systems, right? So let's look at C type of entry, a conservative trader's entry, right? So what does conservative trader look at? So he also identifies a demand or supply, a demand or accumulation zone, and he allows the price to come back in this zone. And once the price is in this zone, he would go to the smaller time frame. So let's say if you are looking at this zone in 30 or 60-minute time frame, that could be your swing trade, or that could be your intraday trade, right? And in a smaller time frame, the same chart would turn out to be like this. Let's say the smaller time frame, 5, 10, or 15-minute chart. What he would confirm is your price pattern makes higher high, higher low, confirms the trade, higher high, higher low. So he doesn't take the entry as a moderate trader takes after seeing the confirmation of reversal. But conservative trader will see, he will allow a small retracement to happen at this level. And once the retracement is complete, and again the uptrend is continued, that means this swing high is broken here, right? That means not only uptrend is confirmed by these three candles, but by set of candles. So he would take entry at this level, and he will allow his trade to develop till it reaches the distribution zone. Again, in distribution zone, what he would do, he would look for a similar kind of pattern, lower lows, and breaking off swing low, right? So that is conservative trader. Personally, I'm a conservative trader. I generally look for this kind of patterns, and this gives a peace of mind. This gives a lot of confirmation, and not only that, in coming charts in real life example, we will see how your conservative trading entry exit system could give you substantial profits in comparison with moderate trading techniques. I hope I'm not confusing you. It's a very simple. Let's get to a chart, right? So this is a Titan chart of after the recent fall. So in this, let's first identify. So the price from this level has gone up, and this is historically accumulation zone, right? And then it went up from this level, which is a distribution zone. It has come down again back in accumulation zone. And then let's see how it is moving and what kind of trading opportunities it is providing us, right? So now this is a daily chart. In a daily chart, after identifying the zones, we need to get into the smaller time frames. So let's get back to the 30-minute time frame, right? And see what kind of patterns are emerging, right? So let's go back to that zone. Right. So this was the zone, accumulation zone. The price has fallen to this point, and let's see what kind of scenario is emerging here and what kind of entry systems would have given you what kind of results, right? So we'll further enhance this, right? So closer to your accumulation zone, you may see this is giving you a bullish entry here. Yes, price did go up, but it did not go further up. So this could be your A type of entry. The price did not even enter the zone and you could have taken the entry for long, right? And even for that matter, this could be one. Let me identify where all a trader can make a mistake, right? So this is also very close to uh, accumulation zone, right? And this has made here a bullish engulfing, right? So that could be one area where you can get the entry, but this entry does not take you long. It, just after a little while, it starts falling. So that's a risky. This point also can give you a long entry, but again, this goes a little up and then starts falling. So this is basically A type and A type. Then you look at this entry. Now, in this place, you see there is a hammer, right? And you could take this entry also because this is, you know, bullish sign. Apart from that, the next candle, it has made a higher high and higher low also. So you could have taken entry somewhere here. Yes, it went up and you could have made some profit, but you would not know to exit at this point of time, right? So let's look at now. This is a B kind of entry. Now let's look at whether we got C kind of entry here for the conservative trader, right? So the market came back in this zone again, and you see from this low, market went up, then again it fell down. This time, right? So this time you see this low. Let me make it a little smaller, right? Right. So this time you see the next low is above than this previous low, right? And then it went up, it broke this swing high here, right? And not only it broke this swing high at this point of time, it is out of the zone as well, right? Now you can see it's a kind of pattern what we talked about. So this is the C kind of entry, right? Is the entry of conservative trader, right? All right. So if you would have taken the entry at this level where you would have kept your stop loss at this level, this could have been your stop loss, let's say this level. In fact, it would be slightly above, right? So consider that this could have been 810, 810 and 830, 35. Let's say you would have taken entry at 835. So 25 rupees risk you would have taken in Titan. And what would have happened further? Let's see now how the market goes, right? So market went up, and then we already have marked the distribution zone, and you would have exited somewhere in the distribution zone, again looking at the C type of exit, right? Because you would have got the exit here as well. So this could have been your A type exit. Yeah, had you exited before even you reach the zone. Now, so again, let's identify this could be your A type exit. This could also be your A type exit because it was very close to the distribution zone. And even if you look at this red candle, which looks like more of a dark cloud cover. So this could give you a B type of exit, right? Sorry guys, this is not making a very good writing here. Okay, and now what more could have happened had you identified here whether we are getting any C type of exit as well as C type of entry for short trades here, right? So let's say from this point the price came to low side, and from here it went up and it came here. So at this point of time it broke swing low. You could have got exited at this point of time, and you could have taken a short entry. So this confirms that you have got C type of exit at this point of time, right? So this is your level broken. Okay, and then if you would have take now, what would have been your profit? You took entry at 835 and you would have exited at 1013, right? Or let's say 1010, 175 piece. A profit you would have got in this trade, right? And the risk was, so with 25 rupees risk, we got a 1:7 risk to reward ratio in this trade. Now, when you would have taken a new entry, short entry at let's say 1010 rupees. Now, from there, it has come down here. But now you have to see that there might be a new accumulation zone formed in between, right? So you'll have to identify there is a new accumulation zone formed here at this level, right? Let me mark it with green, right? So now the moment you enter in this zone, you can book your profit, right? Again, in this area also you can look for one early exit. See, close to this it made a hammer. This could give you early exit, so it could have been your A type of exit, right? This could give you A type of exit because there is a bullish sign there, and you could have also taken exit at this point of time because again there is a hammer here, so that would have been your B type of exit. I'm sure you might be wondering why I didn't say that, why not to exit at 910. Yes, in this case there was a exit, or it could have gone further down, but this is a special candle. Most of the time you wouldn't see this kind of candle. So we are looking at the zones only at this point of time, looking at a pro kind of entry exit system. So this is another way of exiting. And now within the zone, what has happened now? Within the zone, your price has gone up, your price has come down, and then it has started moving ideally a little above than this zone. This says the trend has reversed here. I would have exited at this point, which would have, let me identify that, right? That would have been somewhere here at this point of time at 961. So taking entry at 1010 and exiting at 961. So somewhere around 50 points you would have made as a profit in this, but you would have followed a complete process of entry and exit system. Personally, I am a administrative type of trader, so I prefer to take C type of entry and exit. So that gives me peace of mind, and I always advocate for peaceful trading, right? So yeah, so taking you back to these three types of entry exit while trading, you saw A type of entry as well as exit. and that is not most of the time respected in the charts. That's why we call it an aggressive trader entry exit system. Strongly advised not to take this kind of entry and exit system. B type of entry exit system, which is used by moderate traders, is quite fine and you would see a good success ratio. However, if you take C type of entry and exit system, which is used by conservative traders, you would see your probability increases drastically and so does your profitability. I trust this essential blueprint is clear to you and would be helpful to make you a pro trader or pro investor. If any doubts, do write in the comment box. Thank you very much for watching the video. I trust you will be getting benefited from our technical analysis, trading, and investing videos. To get the latest information, please subscribe to our YouTube channel. And yes, don't forget to press the bell icon to get the notification on our latest videos. To learn about the stocks, derivatives, commodities, forex, trading, investing, you can request for video on the subject of your interest in the comment box. We would try to make the videos as soon as possible. Thank you again for watching and liking the video. Please share the video with your friends and trading or investing community, which can also be benefited from quality knowledge and analysis. Good luck, happy trading, and happy investing.